Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome to the White Rabbit Trading Channel. Let's have a look at some charts. We'll keep it short and informative. If you like this update version more, let me know in the comments. Let's start. On the higher time frame, I'm looking at the power law chart for the worst case scenario on a closing basis. Price doesn't have to touch that level right now, but at some point we usually see a reconnect with it. That could happen here, where the number is currently around 53K on a closing basis, and later it will continue to rise. As long as this metric holds, I go with it. If it breaks, we will reassess and see what is going on. Here on the weekly time frame, I'm currently watching this level where Bitcoin is bouncing right now. As long as this level holds, I'm not aiming lower and simply trading the range that has been forming for a few weeks. Currently, price has not lost this level and is holding it as support. At the same time, we are coming closer to the 202-day cycle time window that has been on the chart for some time. This is where we have often seen reversals or at least a bounce without losing the range period. To be fair, it failed during the last bear market, but in most other cases, it worked as expected, and we saw a bounce. That doesn't mean price can't go lower, but statistically, we more often see a bounce or consolidation rather than continuation lower until we move into the next period where highs tend to form. On the yearly price time chart, Bitcoin is approaching the next Fibonacci time area, which comes in around February 23rd to February 28th. During this time period, I will closely observe where price is positioned. Currently, we see price grinding down along this circle that I showed in the previous videos. For a move higher, price clearly needs to reclaim that area, and we are slowly coming into a situation where price will have to break to one side. What I'm watching is where price will be during these dates. If price is near the lows, then we would want to see a break upward. If price rises into these dates instead, then you would watch for weakness. For example, a move into the timing window followed by a loss of support, which could open the door for lower prices. Also, the next monthly candle opens shortly after this time period, so we have multiple timing factors aligning in this area, making it a period worth paying close attention to. For now, price is bouncing from the area that we had marked out. It had a few attempts to move lower, but so far we see no daily closes below that level. Now on the move up, you can clearly see we have a point of control and the weekly open level. As long as this local level holds, we can aim back toward the weekly open. From there, you observe whether price rejects and makes another attempt lower after a retest, or loses the level and moves down toward my next area of interest. If we see a reclaim of this level, for example, a daily or weekly candle closing above it, or a lower time frame structure break that holds this level as support, then I would aim for the highs on the left. As it stands now, that would be the range high around 72 to 73K. To be precise, it's a bit larger, as this red box extends up towards 75K. So as you can see, we go step by step, level by level. Once price moves into the upside areas, I will look for a trade by assessing strength or weakness, and then act accordingly. With that said, my next action levels remain the same, either below or above the current range. With that, we can now look at the lower time frames. Okay, here we had a few trades. The first one is still running after hitting some TPs, the short is still running after hitting the target, and the new long is also still running after hitting some TPs. For now, 25% remains in the trade for the higher target. Yesterday, price came back down to the entry, and you can see why it was important to pay ourselves on the way up, as price basically retraced the entire move down. I had my limits ready here on the lows for the next trade, but this one was not stopped out, and the lower levels were not touched. So what I do now is simply stay in the same trades. If price comes lower into this level, then I will look to trade it. And if we see a rise, I will take more profits at the higher targets. That's it. No overtrading in between and no jumping in and out. The next action level is either below or above. at least for me. Another thing we are looking at locally is the lunar timing, which hits today. Usually this is a bottom formation area. If you've followed me for some time, you've seen this a few times already. Around these dates, we often look for some kind of reversal. I'm also watching this range time period. Mainly, we currently have about 40 bars on the 4-hour time frame. We can see 40 bars so far, and the next cycle started yesterday, which so far marks the low. What I'm watching here is the midpoint of this time period, and observing whether the high forms before or after that midpoint. I explain this in more detail on Telegram, but simply put, if we see a rise and a high forms before the midpoint, followed by rejection and no new high, then we most likely continue chopping lower slowly. If highs start forming after the midpoint, then we can expect the next move up to be choppier, with a more impulsive reversal and potentially higher lows forming. For me, however, I still treat this as a range for now. Yes, I am buying some spot, but leveraged trades are treated as range trades while letting runners continue. That means if price moves up into this area, I'm not interested in taking a short before at least this level is reached. If that happens, I will closely watch structure. If I see weakness or a valid setup, I will manage a trade there. If it stops me out or shows no weakness for entry, then I simply wait and aim higher for the next attempt. The same goes for the lows. Best case would be retracements hitting key levels near or at the timing windows. That's the extra confluence I look for when taking trades. Yesterday was such a day, but price didn't sweep the lows, so I have to wait. That's the plan for now. Ignore the chop and wait for levels and timing alignment. Now, some rabbit box strategies have triggered higher timeframe trades. Let's have a look at BTC and Ethereum. Before that, of course, I'm not expecting this level to be hit today. I go step by step, day by day. I always have the daily averages on the chart, so I stay realistic and don't expect price to move much higher unless volatility increases. That applies to both the average gain and average loss. For today, the average gain sits almost at the weekly open, and we also have liquidity on the left side, so clearly there is confluence at this level. Personally, I'm not shorting there, but it is a level to watch because it also aligns with the point of control of this range. As mentioned before, either we see a rejection there and another attempt lower, or price moves down directly. If that level gets reclaimed, then I would aim for all the highs above, and best case, the main target, which I've been waiting for over a week in this trade. So now, the focus for me shifts more toward timing and which level price will reach before the midpoint of the 4-hour bar cycle. Last time in this range, price made a high before the midpoint, as you can see. After that, there was no new high, followed by a bearish structure break and slow choppy movement downward. If I see the same behavior again at the highs, I will look for a trade. That would mean the move up happens quickly within a few days, and afterward price spends more time retracing. The move happens fast, people turn bullish and start longing every retracement, which then leads to lower highs. Before most people realize it, the move is already over. The opposite scenario would be price grinding higher and making new highs after the midpoint. In that case, the reversal could happen faster, but overall higher prices would be expected. For that, we need more data, and we'll evaluate it when the time comes. Now, let's move to the rabbit box. On the 5-day time frame, my strategy triggered a trade and basically signals that we will revisit this high. It can take time and price can still move lower, but historically, after the strategy triggers, we eventually see this target reached. These higher time frame trades do not trigger often at all. On the 5-day time frame, we've only seen it a few times, and the same applies to the weekly, so it's a rare signal, and I take it. A move up from here would be around a 43% move, which is not bad, and I'm fine waiting for it. Of course, there are compound levels visible here, so you can note them down. If you want the indicator, you can join the Patreon and get access to it as well. The approach is simple. I buy when it triggers and sell at the target, while managing position size properly, because we never know if something could go to zero. That's why I allocate extra size specifically for these setups. The target here is 95,800. Now the same applies to Ethereum. Last time I shared a setup on the 2-week time frame where we had weak highs, and that's where I bought lower and rode the move to new highs. This time it's not a 2-week setup, but a 5-day one. Still solid. From here, the target is around 74%. Of course, price can move lower, and below you can see the compound levels for that case. The lower price goes, the higher the potential return afterward, since the average entry improves when adding to the position. The target here is 3,366. So that's the current plan. Active leverage trades while waiting for the next opportunity, either higher or lower, ideally with price reaching key levels inside the timing window. At the same time, higher timeframe rabbit box spot buys are active with attractive percentage targets. This is not financial advice, but if you're looking for a longer-term setup with a defined target, this is the one I'm currently taking and holding. As extra confluence, I'm also looking at the Ethereum-Bitcoin comparison chart. What I marked here is a divergence that can be useful. These were the moments where Bitcoin made a lower low, while Ethereum made a higher low. A bullish divergence on Ethereum. This happened 4 times before, and all of them marked major lows. As it stands now, Bitcoin has made a lower low, while Ethereum formed a higher low again. That adds additional confluence for the spot trades. I'm fine being wrong because I follow the data. When I'm wrong, I don't see it as failure, just a lower probability outcome playing out. The goal is to stay consistent with high probability events and accept that losses are part of trading. Here, with spot positions, I can't really lose unless price goes to zero. So always risk only what you are comfortable losing in a single trade. That was the quick update. I hope it was helpful. If you prefer faster updates like this, let me know. Until then, I wish you a nice day and see you in the next one.